Imagine having the heaviest institutional hitters in crypto sitting right in your corner, only to watch your token lose 83% of its value. For anyone scanning the market, that kind of drop forces a very specific question. Are we looking at a rare, heavily discounted entry point, or a toxic falling knife? This is the exact scenario playing out right now with Hana Network, a token hovering around an $11 million market cap. On paper, the pedigree is exactly what you want. The project carries Tier 1 institutional backing from both Binance Labs and Labs, but the chart tells a much harsher story. Since hitting a peak of 24 cents shortly after listing, the price has bled out, stabilizing near 4 cents today. This makes Hana the ultimate test case. We have to figure out if real, measurable user adoption can actually survive these actively hostile market mechanics. To understand the adoption side, we have to look at the tech. Hana operates as a Layer 1 blockchain built on the Cosmos SDK, while tying into the BNB Smart Chain to bridge SocialFi with Web 4. The goal is to make crypto feel entirely like a standard social app. Users can send livestream gifts, play NFT card games, and execute peer-to-peer fiat swaps directly within the ecosystem. They achieved rapid growth by removing the biggest hurdle in crypto onboarding. They implemented a strict no KYC policy, making entry entirely frictionless. This matrix visualizes the demand side of that strategy. They successfully onboarded over 570,000 users before the token ever officially launched. But growth hacks always come with distinct trade-offs. Frictionless entry builds a massive audience overnight, but sidestepping KYC inherently exposes the project to severe regulatory scrutiny down the line. Beyond regulators, a low-barrier user base is highly transient. If they entered solely for the height and speculative airdrops, they can abandon the ecosystem just as quickly when the initial excitement fades. Hana proved they could penetrate the mass market, but getting hundreds of thousands of people to use an app does not automatically translate into a stable token price. That brings us to the tokenomics, which explains the brutal price action. We are looking at a project with a tiny $11 million market cap, but a massive maximum supply of 1 billion tokens. This cascading chart maps token supply. Currently, 240 to 560 million tokens circulate, leaving a massive gap to the 1 billion ceiling. That gap fills with scheduled unlocks. Millions of new tokens continually flood the market, creating persistent downward pressure. Normally, projects combat this inflation by burning tokens. Hana has no confirmed burn mechanism in place to offset the growing supply. This mathematical reality actively punishes early investors. Because the supply is constantly expanding, the market requires continuous, massive buying volume just to keep the token price completely flat. The tokenomics act as a permanent wall of gravity. Even with over 500,000 users generating activity, that upward momentum is mechanically suppressed by the inflating supply. When we look at the immediate price action, the impact of that gravity is obvious. The token has collapsed 83% from its September 2025 high of 24 cents down to today's 4-cent level. This flowchart maps the capital decision. Deploying into this microcap offers multipliers if it recovers. Weigh scenario A against B. For A, buying volume overpowers unlocks to reclaim 10-cent resistance. Under B, unlock volume exceeds demand. Catching the bottom exposes you to severe downside risk. Because these heavy technical barriers are constantly looming overhead, overall market sentiment remains highly cautious today. From a pure return on investment standpoint, entering this trade requires high capital patience. You have to be willing to absorb further pain until a clear technical reversal is confirmed on the charts. Here is the full picture. This scorecard table balances Hana's strong fundamentals, the massive user base and Binance backing, directly against its harsh mechanics, specifically the billion token supply and ongoing inflation. The bullish arguments are completely valid. The Web 4 ecosystem functions well. The 570,000 users are real, and the institutional pedigree provides undeniable credibility. But the cautious reality is driven by math. For the price to appreciate, the development team's execution and the resulting market demand must rapidly outpace the sheer volume of the token unlock schedule. Because the mechanical sell pressure currently overrides the fundamental adoption, Hana Network lands as a definitive watch. Taking a position today is a long-term bet that the product's vision will eventually survive and outlive its short-term tokenomic dilution. If you found this helpful, smash that like button, subscribe for daily crypto breakdowns, and share this with someone who needs to see it. Drop your thoughts in the comments. Are you bullish or bearish on this one?